Well, thank you guys again for joining everybody. I'm really excited today. We have a special guest, Marie Peters. Marie is from B-Side Capital. B-Side Capital is what is called a CDFI. They are based in Colorado, but they do business all around the Rocky Mountain region. We're going to get into what B-Side does, what CDFIs are. But I just did want to give a quick personal testimonial. As when we were first starting our business, B-Side, which was then Colorado Lending Source, helped us acquire financing to start our operations, expand our operations. They actually did our first loan on our first commercial real estate building that we did. So they've been integral into our personal success, and they've been very, very helpful for multiple of our clients across the Colorado region. So with that said, Marie, welcome to the webinar. Thank you so much for joining us today.
Of course. Thanks for having me.
Yeah. So why don't you just start, give us a bit of an introduction about yourself, your background, and what you do now with B-Side.
Great. Hi, everybody. Thanks so much for having me here today. My name is Marie Peters. I work with B-Side Capital and B-Side Fund. We're two sister nonprofit organizations that help with small business financing, as Jessica mentioned. So we've been in Colorado for over 30 years now, and we're what's called a certified development company, which is what allows us to work with the SBA loan programs such as 504, which helps businesses purchase commercial real estate. And we also work as a lender service provider for the SBA 7A loan program. And so that's a loan that you would typically get from a bank, but it has SBA attached to it because SBA provides a guarantee. So if you think about really large banks, they have an in-house SBA department that has that expertise, but some of the smaller community or regional banks or credit unions that want to offer SBA loans can partner and work with us, and we'll walk them through the process because we know SBA so well. B-Side Fund is our sister 501c3 nonprofit entity where we do direct lending. So instead of working in partnership with banks to help access to capital, we are actually the lender. So we make those lending decisions in-house and work directly with small businesses. And under that program, we can provide financing up to $150,000. We do that with a variety of funding sources from the state, federal programs, including SBA Community Advantage. And so we do those smaller dollar loans that sometimes can be hard to get from a bank. So we're technically not a CDFI, and I'll get into that here shortly. A CDFI is a certified development community development financial institution, which is a certification that a business gets or an organization gets from the U.S. Treasury under the CDFI fund. It's a special certification that mission lenders get to be able to access funds from Treasury to make these small dollar loans. And so we're applying for that status. So we're undergoing that right now. So technically we're not official, but we act very much like a CDFI.
Awesome. I appreciate the overview, Marie. So let's talk a little bit about first the difference with when somebody comes to you and they're looking for, and we'll talk about the fund side first, direct lending. Like what is the difference in the experience of working with someone like you versus a traditional lender, a traditional bank?
Great question. So we always encourage business owners to work directly with the bank that they already have a relationship with. You're going to get the best terms, the best interest rates from the banks. However, sometimes lending can be challenging for certain types of businesses that don't meet the bank requirements. So in the defense of banks, they have 3 different federal regulation agencies that make sure they're following all sorts of rules. And so sometimes that can make it hard for them to do certain types of loans. And for example, businesses that are in operation for less than 2 years, business acquisitions where you're financing a lot of goodwill and maybe there's not collateral to back that up. So that's where a lot of those SBA programs can come into play, or other alternative lenders like CDFIs and other mission-based nonprofit lenders. So if you're working with a bank, they're going to have set paperwork and requirements that they need to follow. But again, if a project falls outside of their requirements and they're unable to help, that's when it might be a good idea to reach out to an alternative lender, a nonprofit lender, who can accommodate those projects that are slightly outside their credit box. So some examples of projects that might be better served under a CDFI would be business owners that may have a lower credit score or lack of credit history that the bank would want to see. Maybe they don't have enough outside capital or cash to put into a project that the bank requires. Perhaps they are not yet in business for 2 years and don't have 2 years of business tax returns, which banks typically like to see. Or maybe the business doesn't have assets or collateral to pledge for that business loan that the business typically would require. And again, business acquisitions fall underneath that, because a lot of times when you're purchasing a business, you're purchasing the name and the client list and what that business is going to be able to generate revenue in the future, but there might not necessarily be hard equipment or anything else behind that. And so that's why we see a lot of business acquisition type of projects under CDFIs or mission-based lenders, as well as SBA programs. So those are just a few examples of when projects might not be bank ready, and it may make sense to work with a nonprofit lender.
Okay, awesome. So what I want to do is I kind of want to walk through each of the products and services that you guys offer, and let's start with the lowest dollar amount and work our way up, right? And I do want to talk about like business acquisitions, but we also do have some people that are on the call that may be searching for growth capital or trying to take their business to the next level. So we'll talk a little bit about that too as we touch on each of the products. So first, let's talk about the smallest loan product. Like, what is the minimum size loan that you guys can do either on the fund side or the capital side?
So on the fund side, our loans vary between $20,000 and $150,000. And loan proceeds can be used for working capital. So like any business use, so that could be the growth capital that you just mentioned, inventory purchase of fixtures, furniture, equipment, debt refinance, if you've taken out higher interest rate loans that you'd like to get a better interest rate for, as well as business acquisition. And so what we do under that program is we offer long-term options. So a lot of times when you may be seeking a working capital loan, you can get a loan for 3, maybe 5 years. If you try to go through an online lender, sometimes it's even shorter, of like 6 months or 24 months. What we try to do under our programs is have a 7 or a 10-year term. And so what that does is it lowers the monthly payment to help with a business's cash flow to make that affordable. Because again, we're a nonprofit lender. I should have mentioned this earlier. So the reason why we recommend going to a bank first is you're going to get the best interest rate from a bank. An alternative nonprofit lender has to charge a little bit higher than the bank, but and so our interest rates are going to be higher. But by stretching it out over 7 or 10 years, it lowers that monthly payment to make it affordable and responsible lending.
Yeah, actually, that's a really key point, because especially in the lending environment that we're in, we have seen some lenders shorten their terms, right? Which is kind of a double-edged sword with where the interest rates are now, right? Because the rates have gone up. And if now the terms are shorter, now your monthly payments can be drastically higher. So that 7 to 10-year period, I know that even though traditional banks can do SBA loans up to a 10-year term, it's probably more typical that we're seeing on the shorter end of some of those right now. So that's a really important point. So let's talk a little bit about is this the Community Advantage program you're talking about between?
Yes. Yeah. So we have multiple funding sources, and I didn't talk about location. We've always been in Colorado, but we recently expanded to Arizona, New Mexico, and Utah. So we can offer those loans from $20,000 to $150,000 in all 4 states using that SBA Community Advantage loan program.
Okay. So talk to us a little bit about the process, because the process is different. Using community advantage loans, a nonprofit lender, the process is different than going through a traditional bank. So when someone engages with you, what type of vetting process do you have for that business owner, the business buyer, and what's like kind of the time frame or turnaround for these loans?
So we start the process. We have a quick eligibility check on our website. So it takes a few minutes to answer a few questions that will allow you to route you to the right loan product. So again, we have these smaller loans, we have larger real estate loans. So we want to make sure business owners are getting to the right spot. If you're a fit for our direct loan programs, that's when we will send you an invitation to our online application, where we'll start collecting that backup documentation. So with mission-based lending, we are going to be collecting the same documentation as a bank, but we may have additional forms that we need for the SBA or other government agencies that we work with. And so we set up a secure document portal to make sure that everything's really organized of exactly what we need to collect signatures, and all of that. And so with certain projects that may have multiple parties involved. So for example, sometimes we have to collect seller financials, but from the new owner and borrower, we have to we have to collect other documentation. And sometimes a broker can be involved that need to provide the asset purchase agreement and whatnot. We can add all the different people to that secure document portal and clearly tag who is assigned to what. So it really helps streamline the process for that document collection. When we talk about turn times, I would say on the SBA side, we're probably looking at 45 to 60 days. Sometimes that can be shorter if it's an easy working capital loan that we can turn around quickly. But with business acquisitions, sometimes it takes time getting all the parties together. And so depending on everybody's timelines, we obviously do the best that we can, but it can take longer.
Okay. It's just about typical, right? 45 to 60 days is actually a pretty good turnaround now. All right. So let's move upstream a little bit now. And let's talk about the next product and the next type of size loans, which is 7A, right? So talk to us a little bit about how B-side engages on 7A, if it falls on the capital side, how that relationship works with the bank, or is it still kind of on the direct lending side?
So B-side capital, so it's we act more as a facilitator or as a lender service provider. So when you get an SBA 7A loan, you get a loan directly from a bank or a credit union or traditional financial institution. The way the SBA fits in is they provide a guarantee. So it's kind of like having the government co-sign a loan for you. And so again, large banks might have an in-house department that can handle that and have that expertise, but smaller banks and credit unions and community lenders who want to offer 7A, but are unable to have like a 7A department, that's when they can reach out to us and hire us as a lender service provider. And we walk them through the process of getting that SBA approval, putting the documents together for that loan closing. But from the borrower perspective, you're still getting the loan from the bank. B-side capital is more in the background, helping the lender with all of the paperwork and making sure everything's in order. 7A, similar to the SBA Community Advantage loan program, can be used for a wide variety of business purposes. You can purchase commercial real estate, working capital, business acquisition, purchase of equipment, and debt refinance. There are certain rules for that. But really anything that your business needs. And so those loans, I believe the minimum on those might be 25,000, but they go all the way up to 5 million. And so depending on the loan amount, it's either 85% guaranteed or 75% guaranteed, which is typical. If your business is an exporter, then sometimes that can go up to 90%. So again, those are those larger bank loans where SBA is in the background.
Yeah. And obviously we talked about this a couple of times is, this is still a bank loan and you guys are help facilitating the background. But if someone reached out to B-side and did that pre-qualification form, can you help connect them or introduce them to some of the banks that you work with?
Yes. So we understand that businesses are likely to have a business banking relationship already. And so we always encourage to reach out to the lender you have a relationship with. However, if you're unable to get a business loan from your lender, we, again, through our eligibility check process, depending on the loan amount that you're seeking and what it's for, we can invite you to opt into what's called our lender deal room. And it posts your business name, the amount you're looking for, what you're going to be using it for, and maybe age and industry. And our community of banks, because we work with so many, banks throughout our 4-state region, can log into our portal and see all of those potential projects and then be able to reach out to small businesses directly. And so that's how we're trying to match make those business owners that may not have a lender for their specific project.
Yeah. And I think that's important too, is like, yes, reach out and work with the lenders that you already have a relationship with. But sometimes when you're looking for financing, whether it's the buyer that's acquiring your business for acquisition financing or through growth capital, I hear a lot of times, well, my banker told me I wasn't SBA qualified, right? Or my business was not SBA qualified. And there are disqualification rules for SBA products. But by and large, when I hear that term, it's more of the lender or the bank didn't want to proceed with that loan. It's not about SBA disqualification. So I always invite people to have conversations with multiple lenders, because outside of the SBA program or within the SBA program, the banks are still lending the money and the banks are making the decision, right? So the banks might have a narrower credit box than the SBA defines. The banks might invest in only certain industries, and that's not an SBA thing. That's just a banking choice. So I think it's really important that, yes, reach out to who you're working with, but especially in an environment that we're in right now, it's changing very quickly in lending. It's always a good idea to have conversations with multiple lenders. So Marie, thank you for putting that together. It's like, I love the deal room. It's almost like, here's like banks bidding for your business, almost like a reverse of what we're used to, right?
100%. And going back to your point about talking through eligibility, we're always happy, even though we're technically the go-between, to have conversations with business owners on if they're going to be a fit for those SBA loan programs. And so if you want to reach out to us, we can have that conversation with you. You'll know, yes, I am SBA eligible. And that could be, a tool in your toolbox when you go out and start having those discussions with banks.
Yeah. All right. And then the last product I want to talk on is the largest loans typically is the 504 program. So tell us a little bit about 504, what it's typically used for, and if there's any process differences between the other two.
So SBA 504 is the commercial real estate program. And so it allows small business owners to purchase commercial real estate. And if you think about purchasing a building, that can sometimes be very difficult for small businesses, because if you go through a traditional lender, and again, all of them have different requirements, but typically you might have to put down, 20, maybe 25% down on a building. That can be really expensive. And when you're doing that and you're saving that down payment, it's taking that cash away from operations and working capital. And so sometimes that can hold business owners back. The 504 program allows for, if the business has been in operation for at least 2 years, and the commercial real estate that you're purchasing is not considered special purpose, you can have a down payment as low as 10%. And so it makes it achievable for business owners to purchase that real estate. And I should mention, it's for owner occupied. That means it's the business is occupying at least 51% of the property. Because SBA doesn't want to help landlords, purchase property and then rent it out. What they're trying to do is help small businesses, who are typically the tenant, to own their own business or own building, so they can control costs, grow, stay as a pillar, company in the community, and just make that achievable. Because when you think about paying a mortgage versus paying rent, you get to build equity over time. And that builds equity for your business, but for yourself as the owner and your family. So that's the kind of economic development we like to see. With 504, there's a 20-year option and a 25-year option, but it's a partnership between a bank and a nonprofit organization like ourselves. So the way it works is, say, it's a 50-40-10 split. So if you have $1 million project, you're going to get $500,000 from the bank, $400,000 through the SBA loan, which we facilitate, and then your down payments, that 10%, the $100,000. There are other scenarios if you're, younger, less than 2 years in business. It could be a 15% down payment. If you are, if it's considered special purpose, like if you think about a hotel can only be used as a hotel. That's going to be an additional 5%. So that's going to be 15% down payment. And if it's special use and younger than 2 years, that's when you'll have the 20% down payment. So you would work with your bank. You would work with us on that SBA piece. And that SBA loan is what you will have a fixed interest rate for 20 up to 25 years. And so having that predictability of what that payment is going to be for that time period makes the program really, really attractive.
Yeah. It's a great program and a great way for business owners to purchase their own real estate, obviously control that side of the business and not being dependent on a landlord. So I know one of the burning questions on the call is because we do business across the nation. At this point, we still have a large amount of customers in Colorado, and we'd love to work with you guys, but we know you're focused in the Rocky Mountain region right now. If we're in different regions of the country, how do we find nonprofit lenders like you, CDFIs? How do we find those connections, and how do we vet who's a proper connection to work with?
So if you are operating outside this region, there's a wonderful organization, and I can drop the link in the chat and then I'll also share with you, Jessica, for the follow-up email. But the Association for Certified Development Financial Institutions is Opportunity Finance Network. And they have a directory on their website, so you can quickly punch in, I'm located in this state, I'm looking for a business loan, and it will pop out those CDFI lenders that are going to be really well vetted. A lot of CDFIs are nonprofits. There are some for-profit entities as well, but having that designation means that they've been vetted by the CDFI fund and Treasury and are like a safe, responsible lender. So I would, I'll share that. If you're looking for an SBA 504 loan or an SBA lender, again, start with your bank. SBA also has a listing on their website for lenders that do 7A or nonprofit organizations like ourselves that facilitate those 504 loans. So I can share that link as well.
Okay. Yeah, that'd be great. And we'll put both of those links in the follow-up for everyone too. Okay. So last question I have for you is really general, Marie, and then we'll go to Q&A from the audience. But any tips or words of advice for specifically our business owners on the call that are getting ready to sell, knowing that they might not be getting financing themselves, but they're trying to prepare the business so the business is financeable for a new buyer. Do you have any words of advice for them at this point?
I would say, I guess a few things. One, through this process, all lenders are going to want to collect those seller financials. And so having that documentation ready, which would be historical tax returns or interim financial statements, is going to be really key, and being open to working with all the different parties, right? Because there's going to be the asset purchase agreement that needs to be worked on. So being open and communicative on that. And this is more your area, Jessica, but finding the right buyer too, I think is so important. And I think a lot of lenders want to see, what is that transition going to look like for the new owner? What are they going to be doing differently than maybe previous ownership? Is there going to be an overlap period where the seller is staying on to help coach that new owner? What's that going to look like? Because as a lender, we do like seeing that overlap. Again, it doesn't have to be too long. In fact, SBA restricts more than 12 months because they want to make sure it's a true ownership transition. But if there's some kind of coaching or mentoring or consulting that is set up, it does provide assurances for the lender that the business is going to be successful once the business changes hands.
Two great pieces of advice. I couldn't have said it better myself. So with that, we are going to open for questions. So you can drop your questions into the chat. If you have confidential questions, you can message them directly to me by selecting my name, Jessica Fiakovich, in the chat instead of sending it to everyone, and we'll keep that confidential. I'm also going to end the recording right now.